Hi all, this is Kamal Shah. Okay, so I think it's 9 and we'll be starting now. So, hi everyone, my name is Kamal Shah. I'm a stock market trader and a trainer, and today we are conducting this webinar to highlight Destiny, which is one of our program where we say discover a trader in you. So, Destiny actually means discovering a trader inside you. So, we all have a trader inside us, and let's see how we can explore him, discover him, and see who this trader is, which we all want to become. So let's see what who a trader is. So a trader is no one but one thing which conviction with conviction he can say that he is in the best business in the world. The reason why I say that I've been a trader, I believe that it is the best business. And the reason why I say this, I say always with those three reasons. One is you can start business with any capital. So there is no other business but in which you can start with any bare minimum capital. Like in stock market, you can even buy one single share. No one is going to stop you to buy even one single share. So that is how this particular business is, that no capital requirement is needed, not a big capital is required. The second reason I say is, whenever you in any other business you see competition or peer pressure where people have to say cut down on their profits or go into a area where they cannot uh, have a larger profit margin so that the competitive rates are being taken care of. But in this business, there is nothing like that. You, me, every one of us can easily buy a single share of a single company and we all can make good profits. There is no restrictions in the profit that anyone can make in case of stock market. And lastly, with any other business, can a businessman shut down the office for a month, 2 month, enjoy a good vacation, and will he be still able to find his same customers, clients coming back to him? Not that possible, right? Because we all know that once you are not there in the business, there are so many competitors available in each of the stream where they will take away your business from you. But in case of a trader, he does not have to fear this. The only reason is he is there in the market, he's finding opportunities, he trades opportunities, makes money. If he wants to take a break, he can take that break, come back, and just open his charts, and the opportunities will be still in front of him. So there is abundance opportunity for him which will never fade away even if he is not in the market. So that is how this particular business becomes the best business in the world. Second thing what we say is, it is very easy to analyze a stock and find the best one. So every day if he's just able to spend around 1 hour, 1.5 hour maximum to go through few stocks that he is always looking for, he can easily get the best one to trade the next day. So that is how easy it is, and we will see in this seminar how easy he can trade by means of two of the strategies that we will show you in this webinar. So then he is also boss of himself. Now this anyone at job can easily relate who a boss is, and we all know that boss is always right. So with that, if you just understand that a person who is now his own boss, like he can govern his own terms, he can work for say 2 days in a week and just take a weekend from Wednesday. So like he can fix his own target that he wants to earn a simple amount of money, say 40,000 rupees in a week. And if he gets that in a single trade he takes in on Monday, then he may just say it's a week off. Like he has that liberty, easily he can do whatever he wants. And now since he is able to trade and make the same money in a single day, he also can have the other thing what we call as time freedom. And where would he spend this time then? So there are ample of ways where the person can spend the time either with the family or follow the passion that he wants to do. Okay, and also he can have more bonding with the friends, family circles, whatever that person now wants to do in his life can easily do that. So that's the reason why this person is basically in one of the best business, because none of the business would give anyone this type of opportunities. So again, all of this comes with the single thing that we call as financial freedom, because he is able to make that money eh, very easily in the market. And that is where we call it, that is financially free as well. So that is now, hope we all are in the same page, then we know who this trader is. Now there is one myth that I would like to bring out. People think that stock market trading is nothing but gambling, and there is no one can make money, right? But tell me one thing, for a life like this, what we just described, a trader that actually have to need to have a disciplined life. He cannot be a person who's lethargic, because if he's letting one trade that he takes in that fashion, he might incur a huge loss. So he has to be a disciplined person, right? So now tell me, is gambling possible with discipline? They both are actually contradictory. So a person who's gambling, he's never been disciplined. We all know that gambling mentality, right? And a person who is disciplined will never gamble, because he knows exactly what he's doing. He will be taking calculative risk but not gambling, right? So that's the reason why we say stock market is not a gambling place. It is a place where anyone and everyone can make money. So now we understood who this trader is, and we also talked about the myth about stock market and gambling. So now let's see where this particular trader works. So let's understand his workplace. So his workplace is nothing but stock market, right? So now we say that the first line says stock market is a place to earn money and not to lose money. If you see very clearly, we have striked out not to lose money, right? Because we believe that, as we just said, if it is a disciplined way of trading, you will never lose money in stock market. And it will always be like any other profession, any other business, a business to make money, to earn money. Now what is the stock market actually? Is it something like reality or something, or is it something like perception of people, right? Because if you see, when does a trade actually takes place? A trade takes place when someone is buying and someone is selling. So now why is this opposite thing happening in the same stock? Why someone selling and why someone buying? So it's about the perception of this people, because one thinks the price is going to go up, so he's buying, and the other thinks that the price is going to go down, and that's why he's selling. So in a stock market, we are always against someone's mind, someone's perception. And the thing is, since everything is in the mind, stock market is not a physical place, but it is always in someone's mind playing on. And as the mind never stops, we say the market never stops. So like just an example of this, If we today say Reliance closed around 1140, can we say that if the market is stopped, then in that case, tomorrow when the market opens, Reliance should start trading from 1140 only and not from any other price? But is that what we have seen in markets? No, we've always seen that either it will start at say 1142, 43, or maybe 1136, 37, and it's there is always some movement in the price which is continuously happening. But its only thing is 9:15 to 3:30 is the time to trade. It's not where the market stops, right? Only the trading gets stopped. So that is how stock market is. Now, again, whatever stock market is doing, it's always a probability that it has been doing, and there is no certainty. Can anyone guarantee you that this is how this price is going to move? No, that's always a probability. So always beware of people who say that it's my guarantee this target will come. No, no one can guarantee that, right? So that is the reason why we are saying that it is always probability and never certainty. Now, I just like to say one short story about a lion. Okay, like we all know that lion is king of the jungle, but this particular lion was wanted to make it sure that everyone knows who is the king of the jungle. So he started walking in the jungle and he caught one goat, and he said, "Hey goat, do you know who is the king of the jungle?" And the goat was like scared, and it was like end of the day for her. And she just said, "Hey lion, I know the king of the jungle, and it's you, my lord. So please spare me, don't eat me." And lion said, "Don't worry, I was just checking whether you knew who is the king of the jungle." And said, "Since you know the answer, you are free to go." Then he walked ahead and he caught one fox. Now the fox was again terrorized because that's a lion on him. And the lion again asked the same question: "Do you know who is the king of the jungle?" And now the fox, being very cunning and brainy as well, starts praising, "You know the king? He's very brave. He's very good. He's very kind. And you are the king of the jungle, my lord. Tell me, what can I do for you?" So, listening to these praises, this lion gets into an attitude and says, "Oh, so everyone knows who is the king of the jungle." And it started walking ahead with a pride. Little did he know that he came across a giant elephant. And then he just asked the elephant, "Hey, big guy, do you know who is the king of the jungle?" Elephant didn't respond. And then this king got a little egoistic and said, "Hey, you, I'm asking you, do you know who is the king of the jungle?" At this, the elephant just hold him in his trunk and just gave him 2, 3 hits on the trunk of a tree which was nearby and dropped him down again. Baffled, the lion was like, "Do you know who is the king of the jungle?" asking again. And the elephant repeated the same again. At this, lion only said one thing: "It's okay if you don't know who's the king of the jungle. Why are you beating me so much?" Right? So, this is nothing but the story about market and the people who are trading in it. The people who are trading in the market, they think they are the king. But you have not to forget that market is the king here, and it is always right. You should never challenge the market, because we know if the market starts beating up, we will be left with no capital at all, right? So that is where we say that it is always right and no one should challenge it. Now, when we talk about trader and stock market, and then comes the part of trading. Now we very well know this, that trading is 30% of the skills that a technical trader uses, but 70% is his mindset. So now let's see with who a trader is, where he works, now how he works. Because what we have to understand is technical analysis and why technical analysis is needed today. Technical analysis in India is bit new. Maybe around 8 to 10 years it has started getting some notification, but it's widely been used by traders in US and Europe. So why do people use this and why this is coming up? Technical analysis gives us a systematic approach of timely entry and exit, as everyone of us are aware that in stock market the key thing is entry and exit. And if someone can give you with a proper signal that yes, this is the right time to enter because you have a minimum risk and there can be a good reward, then that's the point where we say, it's a systematic approach. So that is what technical analysis gives us. Second thing is about the risk management, because it says this is the signal because you are entering into the market, into the trade. Now if the signal no more stays in the market, you can easily come out of that trade. So that is the reason why we say it helps you to mitigate risk. And that is the best thing a trader would want to do, because in market the only thing that is there in a trader's hand is risk, and we will see that shortly. It also helps us to find one of the best stocks, because with technical analysis it's very simple to find a trade for tomorrow. It also provides signals for any impact in the market. Now, why I say this? Because if you understand technical analysis is nothing but study of price and volume. And in market, everyone knows that all the news, believe me, all the news are always discounted. They are already included in the price. And since how the price is moving, technical analysis is actually looking into that prospect. It will always give you early signals of any impact in the market, right? Then again, technical analysis does not only say that it is for short term. It can be short term, it can be mid term, it can be long term. It can be like the trader is not only going to be a short term trader, he or she can be also an investor at the same time, because it is an opportunity based trading and a signal based trading. As far as the signal is valid, the person would be there in the trade, right? So that is how a technical analysis helps us. It's again neither on the side of the bears nor the bulls, because with the help of technical analysis you can play on both the sides. Understanding which side is the winning side, you can easily swap your party. It is not to be loyal to either bulls or bears. It's always to be better to make your own money, whichever is the winning side. So that's how technical analysis helps us to identify at the very start who is winning or who is going ahead, and that's where you can change your role as well. And the best thing for for technical analysis, you do not need any financial background. I repeat, you do not need any financial background, because it can be learned by anyone, right? So let's see risk management in more detail. Risk management is essential because if it is overlooked, it may cause the trader his entire life's earning in a single trade. Believe me, if a trader who's doing good job for the entire year, entire his life, and suddenly last trade he misses on to the risk part, it may have wiped him out of his entire fortune that may have built in his career. Okay, so that is the importance of this risk management. And risk management is the key, because as I said, the only thing in our control is risk. Like if anyone tells you to buy a stock, okay, at a particular price, can that person guarantee you the target? No, right? But what he can also tell you is below what level should you book your loss, or how much risk can you take in that trade. So that is the only thing in that person's hand, and even that is in our hand. So that is the reason why it needs to be mitigated. And as Warren Buffett says, risk comes from not knowing what you are doing. So when you know what you are doing, and you know it's a particular amount of risk that you are taking, it's a calculative risk, and every businessman takes this particular risk in his business. So again, stock market not a gambling, it's a particular calculative risk and a disciplined trading, right? So now let's see with different scenarios for risk management. Now, what we normally do here is if I give you a, say, a coin and ask you to just guess 10 times before you toss the coin whether it will be a head or a tail, and if you guessed it right, you give, say, 20% to yourself, starting with 100. Okay, so if it is right, you get, say, 120. And if you go wrong, you deduct 10%. So say it goes to 90. So by doing that type of thing, what you will be able to achieve is, as in a coin, there are only two probabilities possible, either head or tail. In the same way in trading, there can be either stop loss or target. So when you have a proper risk management, like 1 is to 2, say, or 10 is to 20, what we are saying in this example, what we are actually showcasing is 1 is to 2 risk reward ratio. So when in a trade your risk is, say, 1% and your reward is 2%, so say if there is going to be a trade at 10 rupee, at 100 rupees, and your reward is, say, 102, and your risk is, or your stop loss is 99, that is where the risk reward is 1 is to 2, and that is the trade which is worth taking, right? So that is how we say that you need to have a systematic risk management in place as well. So now let's see with these examples. If you go right 5 times and wrong 5 times, then too the return is a good 47% of returns on your investment, which is far beyond any business that can give to you, right? Then if you say you go 3 times right and 7 times wrong, again, in this case you lose only 17% of your capital, and this is can be easily recovered. Not only this, if you go to the next example, we can easily see that if you go 10 times wrong, then to 35% of your capital is still with you, and believe me, you can easily come back from this point as well. This is only possible if you have gone some terribly wrong in your analysis. Otherwise, these results are not that possible. And even the best case which we are showcasing, it's hypothetical again, where you go right 10 on 10. In that case, you make around 600% of your investment. So now let's see in some minute detail how a price is being shown in technical analysis. Price is been depicted as a candle in technical analysis, and if you see, there are two candles, one is green, one is red, and there are four attributes of this candle. One is open, close, low, and high. Now what this actually depicts is a two-dimensional way of depicting price movement in the market. Now, the green candle says that it opened at a lower price and it closed at a higher price. So the green body that has been seen in this particular slide is the real body of the candle, which actually means the real price movement in that particular day. And the wicks, which are the low and the high, these are nothing but the low and the high that were been made by that particular stock in that day. Similarly, the red candle depicts that was a bad day for that stock. It opened higher and it closed lower. And similarly, the wicks will again specify the high and the low made in the day. Now, the green candle is called a bullish candle, and the red candle is called a bearish candle. So now with this knowledge on candlesticks, we will take you through a very important candle in candlesticks family, which is called a doji. A doji is nothing but a candle which has got open and close almost near to the same, which means the real body which we just saw in the earlier slide is either they're very very small or not there at all. So if you see the candles second, third, and the fifth one, they don't have any body. So this are again a perfect doji where the open and the close is almost the same price. And over here in the first, fourth, and the sixth, there is some part of the body. But since it is a very minute, we still consider this as doji. Now, doji in Japanese term means indecisiveness. And indecisiveness in the market means opportunity for the trader. So let's see how we can use this in trading. Now, we need to understand one thing. Dojis are considered to be as small bodies, and for small bodies, there are two golden rule important to be known. What are they? One, color of the body does not matter. As we saw earlier, green and red candle. In this case, a doji is a doji. There carries nothing like a bearish doji or bullish doji. The color is not important for a doji. And the second thing is, it will always need confirmation the next day. Okay, so now let's see the strategy based on doji. This particular strategy is called as a doji star bearish. And if you see that there have been 3 days, the market is going up. So 1 day, 2 day, 3 day, and then we get a doji on the fourth day. Now, this particular pattern means that there is going to be either a reversal in the market, and the market is now not decisive about where to go. As I said, next day confirmation is needed. So now how do we trade this? The trading of this particular pattern is, if the low of the doji has been broken, that is where you enter into a short trade. Short trade means you need to sell the stock first and then buy it at a lower price, which means that you sell higher and you buy lower. Now, when you sell this at below this particular low price, your stop loss is this high. The doji high becomes your stop loss. This becomes your entry level. So your risk is only a single candle, which is just the doji's candle is going to be your risk, and your reward can be till this particular candle at the bottom. So this particular thing from this low to this particular high is called as a swing, and this is called the swing low. So when you short this thing, you are going at, expecting a target of the swing low again. So this particular pattern is called as a doji star, and we'll see this with a live chart as well. And the cousin of doji star bearish is doji star bullish. In this, you can see a similar type of pattern, but on the downside. It's a downfall in the market for 3 consecutive days, and then there is a doji. This doji again. means that there is going to be a reversal of the trend or the way the market was moving past days. Now, again, the entry of this would be on high, crossing the price, crossing the high of this doji, you enter into the trade, and below this particular low becomes your stop loss. Again, your risk is only one candle, and here you can expect this particular thing as your target, which is the swing high, right? So swing high would be your target. Now let's see this with some live examples. So now if you can see the screen, you see that there is a doji after two big red days or black days. Here the black is equivalent to the red candle that we saw in the slide, and the white candle is equivalent to the green candle that we saw. So now let's see, this is a doji again after 2 days of fall, and your trade will trigger above the high of the doji, which is about 1568. So now let's see what happens. So next day the trade gets triggered as this particular price has been crossed. So your trade starts with this as the stop loss. So your entry is already made into the market. Now let's see how it goes. So it is moving in our favor. Again, there is a small body. So we need to wait for confirmation the next day. Yes, so there is now the low. So now once this candle was there, okay, let me just go one candle back. When this candle comes, this low of this candle now becomes your stop loss because you're already making some good money. You should not now incur any loss. So now your stop loss gets revised, and this is going to be your stop loss. Now let's see whether your stop loss get hits or it moves ahead. And now again there is a doji. So now again this becomes your stop loss. So you are increasing your profit actually day by day, candle by candle. And then let's see what happens. Aha, so the target has been made. So can you see that how many days it took to give you the target back? It is 1 day, 2, 3, 4, and 5 days. So this type of a trade where you are actually holding positions for 5 days is called a swing trading, and this is one of a doji star strategy to trade in market, and this works very well. Now let's see a different example of doji star. So now if you see this particular pattern setup, this particular line, like this particular candle resisted a certain price, and now there is a doji again at the top. So after it was already moving higher and higher, we now have a doji at the top. Now this line is acting as resistance already, so now this becomes a stop loss for a short trade, and you short below this particular level. So below 940, 740 is going to be your entry, and this particular part, which is the swing low, is going to be your target. So 708 is your target. So 32 rupees is your profit, expected profit, and 740 minus 751, which is 11 rupees, is your risk. So this is how your risk reward should be for any trade that you are taking. So now let's see what happens. So the short gets initiated as the low of doji has been broken. Then again it is moving in our favor, again moving in the favor. Now again there is a doji at the after 3 black days. So now you revise your stop loss to 726. So now let's see what happens. And the target has been met. Again you get the target back. So this type of trading based on doji is a swing trading strategy, and this can be done either on any time frame. So if you are doing intraday, you can do it on 15 minutes as well, and this can be also done on hourly as well as daily candles. So now let's see some other strategy. So what we just saw is part of our P1 program from SwayCharts, which is simply advanced technicals, where we give you a brief overview of financial markets. We start from very scratch so that anybody who does not even know what a stock is, what a stock market is, can easily understand this. And then we slowly and steadily move towards what are the trend in markets, what are candlesticks, 24 candlestick patterns, one of which we just saw right now. And then we go in detail about support and resistance. What are the various types of support and resistance in market, say like horizontal lines, angular lines, which are also called as trend lines, trend channels. Then we go through the powerful concept of Fibonacci, which is very well used in stock market and is extremely useful for any trader for any re-entry or getting onto a new target for that particular stock. Then we will see what is volumes and what is the relationship of price with volume. We will also showcase a part of the volume which is also called as a danger volume, because not all volumes are used for entry. So that is where we will be helping you to see how to identify that as well. And as we saw, risk management is how important, how much important that is in trading. We go in detail with the risk management strategies that we have to adapt in our trading. Along with this, there will be 20 plus trading strategies included in this particular program. What is the requirement for this? Nothing. No educational background required. You need not know anything about stock market, because we believe anyone can understand trading and easily do it, right? So now let's understand few trends in the market. In market, there are three trends possible. One is uptrend. So now let's understand what this trend is. Whenever in a market there is a bottom, which also signifies in normal economic terms demand. So whenever there is a demand in the market, we all know that the price will go high. So the price hikes from say 80 to 100, and over here few people would think they made enough money. So once they start thinking that and they start selling, there is going to be supply more. And when there is a supply, we see that there is going to be a fall in the price. And that is what it comes here. And say it comes to 90. So now people who sold at 100 will again say that let's start making some more money in this script, and they will enter again. At the same time, people who lost the chance to enter at 80 would find it attractive at 90, and they will add on to the demand. Plus, the people who are already holding it from 80 would think to add on, because always a wise trader is the one who will always add in profits and not average in loss, because loss has to be cut, right? And this demand is now happening at a higher price than the previous. So what we get is a higher bottom compared to the previous, and with this more demand the price will rise and go higher than the previous bottom, previous top, so making it as a higher top. And we always follow this fashion, which is called as a higher top higher bottom method of rising in market. And when any stock or index is doing this, we say it's in an uptrend, right? Similarly, this now everyone would be knowing this, because here we see that the supply zones are forming at a lower levels, and as well the demands are shifting lower and lower. So this particular way in which we are making a lower top lower bottom continuously is called as nothing but downtrend. Now friends, even if you don't do anything in the market, but if someone suggests you SwayCharts.com and see whether this is an uptrended stock or downtrended stock, you should be able to see very clearly and decide whether you should enter this stock or not, right? So that is the main reason why we say that this knowledge is required by a person who wants to trade in the market. And this is sideways market where the price is just bouncing between two levels, say 80, 100, or maybe 120, 140, or any level between which it is just swinging. And this is one of the best trend for a trader, because while he's busy in trading the uptrend and the downtrend and making money in those trends, this is the watch list, because in this the trend will start soon. So that is how he is going to be monitoring this along with the trends he's already trading, right? So now let's see, with this knowledge, can we see if you come to this particular point one here, and it is now crossing the previous stop, can we see what is to be done at this particular point? Out here. So when you buy here, you know your risk is just going to be this. So with this small risk, you enter into the market and you hold and you ride this entire rally up till here. Now when it comes to point two, what is to be done here? We all see that this was the previous right, and then again when this particular thing is moving around and reaches to this point 3, where now we see that this stop is now crossing the previous stop, right? And then again when this particular thing is moving up, we all know that now the buy will commence, right? So this is a particular signal which is representing price is called as a close line chart, in which and but top bottom theory in technical analysis. And if you see this particular chart over here is a 6 months chart from January 2018 to June 2018, and if you see the total number of trades done in 6 months are just 14. Believe me, just 14 trades in 6 months, right? And if you see that buy and sell is happening at the various points like 1, 2, 3, 4, 5, and so on. Again, see the next page, which again shows from July till December. The same thing continues, and in this type of market, the total trades that you take one side half for surprised to see the. Now top bottom on bank nifty means your initial investment is just around 2 lakh rupees, and on that is which is more than 1.5 times of your initial capital. So that is how this is any particular market. It could be a bad month for a trader, but on a year, this particular time in June and July, there are more now occurring. This is what is power of technical trading, right? So this is how it works. So now let's see what is this program included in. This is our P4 program, which we call Simply Build House program, because if you can get return like this, 150% or more than that in a year, that much capital, you can easily build house. You do not need that much money to run your house, but you can easily build your house using that capital. And in this particular program we do such four big strategies, and we make you do the things there and there itself. And then again, what we just talked about, a trader will never ever average in loss, but what he does pyramiding on winning trades. So we will learn systems to add quantity on to the trade which is giving us money already. So that is what we will be learning along with this four strategies similar to the top bottom strategy. Again, for this, no educational qualifications required, right? So now a few testimonials from our where we see there is a guy called Suresh. He's from Mumbai, and if we see, he has recovered his entire money in just 2.5 months. Paid to us, he has recovered that in 2.5 months. And he was trading with a very low capital, which was because he was only trading options. So along with just options, he was able to make that money. And the next one is Warner, and he made a good money again in August, but he waited for 5th September because he wanted to send this message to me on Teachers Day. And this is what he has made: 80,000 rupees on a rolling investment of 5 lakhs within 10 days, and almost 8 out of 9 trades accurately. So that is what this particular training can help you with. Again, this guy Bilin Haria, he's an SYBCom student, and with just two and the two programs done, he was doing a paper trading which gave him almost 1.5 lakh in that 3 to 4 weeks of paper trading which he was doing. So again, this was good confidence booster for him, and he completed our all 4 programs. He is doing trading independently. So now hidden talent within you. Guys, then friends, are you ready to how can discover help you? Or want to two products for us, for all of you. One of them is the Simply Technical Trainings, where we do 4 coaching weekends, where there are one weekend in 1 month, and we have 4 programs. So 4 months the program goes on for. And the second one is advisory thing, which is talking about Millionaire Club trades, where we give you trades only and you just trade on them. So let's see our results on Millionaire Club trades. So what we do on advisory is we give you 1 to 2 trades on daily basis, and we tell you everything from entry into the trade, s- part by part, how you can move your risk ahead, so that you, once you are getting some money, you should not lose any of the money. And we tell you exact exit as well, so that when everyone is exiting, you also exit and make that good amount of money. Only in futures, and we would need at least two lots margin available for you guys to trade and make that money which we are saying. I would recommend everyone to visit our website advisory page, which is on swaycharts.com/advisory, which will give you full detail about this advisory millionaire club trades program. Here are the few results of last 4 months. So October not been that good, been choppy. Still, we were able to make 74,000 rupees in that particular month. November was a trended month and it gave us 1,71,000. December again not that good because of choppiness, too much in the market, too much volatility in the market, and we were able to book 24,000 rupees in that. And in January we were able to, right now we are at minus 2,900 rupees. So if even if you add up the entire thing, we are almost more than 80% of the 3 lakh capital that you would have started the trading with us on October. So that is how we can tell you that this is helping us to help you build more and more wealth. Now let's move on to the Simply Technical training program. This is 4 coaching weekends, as I said. There are 4 programs. P1, which is simply advanced technicals, about which we just saw the candles and the candlestick patterns and trend lines and all. P2, where we just talk about simply indicators, where we go through 3 indicators in the market. One is the momentum, which we call RSI, other is the volatility in the market, which is a Bollinger Band, and third is moving average. So only these 3 indicators are more than enough for anyone to trade successfully in the market. In the market, there are more than 40 to 50 indicators available. We do not need to learn them. We want to keep it as simple and as easy and effective for all of us, right? Then our program P3 is nothing but on simply options and swing trading and day trading, where we go through a life of a day trader, as well as we go into options with again no Greeks. This is going to be amazing because we again make options very easy to be traded by anyone, which means anyone without knowing Greeks. Even G of the Greeks is not been spoken in these programs. And P4, as we just saw, is the Simple House program. Now, the best part of this particular training is we take you back to the school because we give you homework so that you tune your eyes onto the things that you need to see in the candles, into the charts, and that's where it makes you more powerful. Because as I said, it is once one weekend in a month. So if you are attending a program, say the first program is in February, the second would be in March. So you get ample of time to tune your eyes onto the candles and the candlestick patterns, and then when you lay those indicators over them, it will make more sense. And that is the reason why we give you homework. Again, what we are going to give you along with this is free charting software so that you can easily do your homework when you return home after the P1 program, and you can easily start looking into the charts and see how the market is moving and how can you easily predict what can be the next move. Again, we give you 6 months of WhatsApp group and phone support for any query or guidance, and we give you a guarantee of 100% fees recovery that you would be paying to us for the program. Okay, and above all of this, if you don't like the program, we again give you a guarantee of refund with no questions asked. So now the upcoming programs are, we have 2nd and 3rd February in Pune, and 9th and 10th February the batch is starting in Mumbai. P4 for our existing Pune batch is happening on 23rd and 24th of February, and P2 for the batch which will be starting in February is happening on 9th and 10th March for Pune, and 23rd and 24th March for Mumbai. So as you see, there is ample of time for you to get through the homework, and in mid of that, whenever you have any doubts, you can easily call us, you can WhatsApp us, and we will answer to you as soon as possible. And that is how we will help you become more and more powerful traders. So that is how our programs are lined. Our next online webinars are happening on 23rd January and 30th Jan. So if you felt that this is helpful to you and you would like to spread this among your friends and family, please do that. And please note the dates again. These are also been there on our website's event page, and you can easily register onto this particular program from there as well. Now for the fees. So let's see how much is going to be the fees for the first program, which is simply advanced technicals, which covers all the topics which we just talked about. Okay, and this comes, the first part is 100% fees refund if you do not like the program. If you think that the program was something which is already available somewhere, or you've already, attended a similar program, right? If you don't understand anything on the program, we will give you 100% refund of the fees. The fees are 24,000 for the first program. And for all those who have been hearing this particular webinar currently, we are going to offer you a 50% discount. So that is 12,000 is going to be the the cost of the program to you guys. And there is going to be one more surprise. You will be getting 2 months MCT advisory free, which means you get our 1 month advisory price is 10,000 rupees. So 2 months free means you are going to get advisory service worth 20,000 free with this program of 12,000. And with the money that you saw on each month that we are building on, you can easily see that it's going to be much much more for every one of us, right? So that is where we stand. So if anyone is interested in booking your seats with us for the 2nd and 3rd February in Pune and 9th and 10th February in Mumbai, please drop us a mail on kamal@swaycharts.com and let us know your interest, right? So thank you all for this webinar, and please do send your feedback to us so that we can improve on to this particular program, and it will benefit others who are going to join us in the next webinar on 23rd January. Thank you very much. Thank you all.